While the global community was busy applauding the diplomatic thaw between Washington and Beijing this past November, a quiet but lethal maneuver was being executed. Behind the scenes, you likely heard the headlines: China supposedly eased up on its mineral warfare, releasing its grip on rare earths like gallium and germanium. But while the world looked left, Beijing moved right, tightening a noose around one specific asset that everyone seems to be ignoring: silver. They've set January 1st, 2026 as the deadline for a new era of scarcity. We are exactly 3 weeks away from a systemic shock. This isn't just a minor policy shift, it is a cold, calculated move to monopolize the silver market and leave the West gasping for industrial air on New Year's Day. Welcome to The Secret History of Currencies, where we look past the headlines to the math that actually matters. Cast your mind back to the recent summit in Beijing. The media was in a frenzy over the apparent de-escalation of the trade war. Major outlets like Reuters were reporting that Beijing had blinked, suspending export barriers on the very minerals that keep our tech industry breathing. Wall Street responded with a collective sigh of relief, sending markets upward. But here is the deception: China surrendered ground on materials they could spare, specifically to distract from a total lockdown on the one metal indispensable to the global energy transition. Currently, silver has climbed to $62 an ounce, a staggering 115% surge since the start of last year. We've already blown past the previous record of roughly $6,194, but don't mistake this for a typical speculative bubble. This is the sound of smart money fortifying itself before a tectonic shift in supply that most retail investors haven't even registered yet. If we look back to October 2024, the data shows China offloading a record-breaking 660 tons of silver in a single month. This metal flooded into vaults in London and New York, looking for all the world like a healthy response to Western demand. In reality, it was an emergency evacuation. Chinese exporters weren't just selling, they were front-loading every possible ounce before the gate slammed shut on January 1st. It was the industrial equivalent of the last flight out of a war zone before the borders are sealed. They knew the state trading rules were coming, and they cleared out their inventory while they still had the freedom to move. The mistake most analysts make is staring at price candles instead of reading Chinese Ministry of Commerce documents. Beijing didn't issue a crude ban. They built a licensing fortress. Starting January 1st, the right to export silver is restricted to a tiny elite companies producing over 80 tons a year. In a nation of thousands of operators, fewer than 20 firms meet this criteria, and every single one is a state-aligned titan like Zijin Mining. Private enterprise in the silver market is effectively dead. If you are an American manufacturer needing silver for solar panels or medical tech, you no longer go to a market, you go to a regime. You aren't bidding against other buyers, you are pleading with Beijing's bureaucrats at MOFCOM. Why New Year's Day? The timing is a masterpiece of strategic malice. First, it follows the peace deal, using the rare earth concessions as a smokescreen. While the West celebrated a hollow victory, the silver cage was being locked. Second, January 1st is the exact moment U.S. industries finalize their first quarter supply chains. Solar and electronics firms usually lock in their winter and spring needs in mid-December. This year, they are staring into a void. The list of approved exporters won't even be public until the final days of the year, leaving American procurement officers in a state of total panic. Third, this coincides with the Shanghai Futures Exchange hitting a 10-year low in silver inventory, from 2,400 tons in 2019 down to just 780 tons today. China is hoarding its own supply to ensure their factories thrive while ours stall. This is why The Secret History of Currencies tracks the flow of real metal, not just digital promises. Even the U.S. government has finally woken up to the threat. On November 7, 2025, the U.S. Geological Survey officially added silver to the critical minerals list for the first time in history. That wasn't a random administrative update, it was a red alert. By grouping silver with lithium and copper, the USGS is admitting that our industrial base is now vulnerable to disruption. That is government speak, for we are in deep trouble. China has known this for years, which is why they chose this specific pressure point. The math is simple and devastating. China's own industrial appetite, driven largely by their dominance in solar, is about 5,200 tons a year. They only mine about 3,600 tons. They are already running a massive deficit. Why would they continue to export a metal they are forced to import and recycle just to keep their own lights on? They won't starting January 1st. The export valve isn't just being turned, it's being welded shut. The policy itself. MOCOM Announcement 68 is designed to kill competition. Beyond the massive production requirements, companies need nearly $28 million in credit lines just to apply. This isn't about safety or quality, it's about ensuring that the only hands on the silver tap are the ones. Beijing trusts small independent miners who have fueled the Western market for decades are being erased. This creates a licensing monopoly that Beijing can use to punish or reward foreign nations at will. It is the ultimate invisible leash we can already see the physical market breaking under the strain. Last year, silver lease rates in London, usually pennies, exploded to 15% and eventually hit levels 30 times higher than normal. This happens when there is no physical metal left to lend because everyone is hoarding the real thing. Banks in Singapore and Zurich are already rationing supply to their best customers. We aren't talking about a future shortage, we are talking about a current depletion. In a healthy market, you'd see 15,000 tons of liquid silver circulating globally. Today, that number is estimated to be below 4,000 tons. The rest is locked away by people who see the January 1st wall approaching. Remember 2010? When China restricted rare earths, prices for some elements jumped 2,000% in months. But silver is more dangerous than rare earths. You can't just restart a silver mine. It takes a decade of permits and construction to bring new supply online. Furthermore, silver is often consumed in a way other metals aren't. When it goes into a medical bandage or a solar cell, it's often gone for good. There is no emergency stockpile. There is no strategic silver reserve. There is only the open market, and on January 1st, that market is being replaced by a state-controlled allocation system.
The fundamental deficit is already 40 million ounces a year. If China's new licensing system cuts their exports by even a modest 30%, that shortage doubles instantly. There are only 3 ways this ends. We stop making things. Demand destruction. We start gutting old electronics for scraps, recycling. Or we find more mines. None of those happen fast. Silver is currently $62. But the gold to silver ratio is still hovering around 68. In past crises, that ratio has collapsed to 30. If silver simply catches up to the current value of gold, we are looking at $70 to $75 an ounce just to find a baseline. That isn't a moonshot, that is basic market rebalancing. Here is your countdown. In late December, the final list of the 20 Silver Kings will be released. By mid-January, U.S. manufacturers will realize their contracts are unfillable. By February, the 45-day supply gap will hit the industrial sector like a brick wall. This is a mathematical certainty. If you are holding physical metal today at $62, you are standing on the right side of a closing door. The mainstream press will wait until the shortages are already here to tell you why they happened. But here at the Secret History of Currencies, we prefer to read the map before the bridge goes out. The restriction begins in 21 days. The math is undeniable. The policy is public. The question is, are you prepared for the end of the silver era as we know it? If this deep dive helped you see the board, more clearly support the channel by liking and subscribing. I want to hear your thoughts in the comments. What is your realistic price target for this coming spring? For those who want to see the state trading requirements for themselves, the official MOFCOM documents are linked below.